NVIDIA Corporation is one of those tech titans that's been making waves, and hey, who doesn't love a good stock story? Picture this, NVIDIA stock shot up by a mind-boggling 598% in just 5 years. And guess what? There's a plot twist in the market tale. Hold on to your seats because the stock took a cheeky 4.4% to 10% tumble this early August. Yep, you heard it right. It's like the stock market spicing things up with a surprise twist. Is it a storm in a teacup, or is there a crisis brewing? Let's dive into the details and figure out what's the buzz with NVIDIA's roller coaster ride. Many investors are drawn to the stock market for remarkable gains, exemplified by NVIDIA Corporation. Its shares have surged by 598% in 5 years and rose 56% in the past quarter, showcasing the potential for substantial value creation. However, the recent 4.4% dip in early August prompts a closer look at the company's longer-term trajectory and the role of fundamental factors in driving its positive 5-year performance. Commencing over the span of 5 years, NVIDIA experienced a consistent climb in its share price, with an impressive annual compound growth of 47%. This upward trajectory, however, stands in contrast to the company's earnings per share or EPS growth. Its EPS growth exhibited a more modest expansion of 4.3% per annum. Despite this disparity, market sentiment appears to have taken a notably positive turn, likely attributable to the company's commendable track record of earnings growth. This buoyant sentiment is notably encapsulated in the rather optimistic price-to-earnings ratio of 230.54 that currently characterizes NVIDIA's standing in the market. But before we continue, we would like to welcome you to Capitalista. Please give a quick click on the like and subscribe buttons down below. In addition to assessing the share price gain, investors should also take into account the total shareholder return. This metric offers a more comprehensive evaluation, encompassing cash dividends and factoring in the estimated worth of discounted capital increases and spin-offs. The TSR provides a fuller perspective, particularly for stocks offering dividends. Notably, NVIDIA's TSR has stood at an impressive 604% over the past 5 years, surpassing the previously mentioned share price growth. This notable outperformance is primarily attributed to the dividends it has disbursed to its shareholders. Meanwhile, another analyst has provided her evaluation and conjecture concerning NVIDIA's stock performance. As of August 9, a range of estimated prices for NVIDIA has been identified, encompassing the past 3 months. This range, determined through the scrutiny of options trades, spans from $300 to $500. Fast forwarding to August 14, the current value of NVIDIA stock rests at $417.87. This is accompanied by a substantial trading volume of 53,054,697. Delving into the technical analysis, the indications derived from the Relative Strength Index denote that the stock presently maintains a neutral position. This suggests a state of equilibrium, with neither an overbought nor an oversold condition. Additionally, Adam Button, an analyst at Forex Live, commented on August 9 regarding the stock market's performance. He noted a subdued start, followed by an emergence of sellers in the market, particularly impacting the Nasdaq, leading to a 0.4% decline. Notably, NVIDIA faced pressure due to a recently announced chip that failed to incite a positive market response. The company's valuation, characterized by notably high multiples exceeding 40 times trailing price to sales, has drawn attention. Although there are currently no explicit indicators of a significant market correction, the possibility of a decline to $400 remains plausible. One potential catalyst could be a significant consumer price index report on August 3. Furthermore, if Federal Reserve members advocate for heightened interest rates, this could also play a role. While these remarks suggested maintaining current interest levels, the possibility of this remains uncertain. Alternatively, concerns regarding the economy and a re-evaluation of valuations could lead to a shift in market dynamics. At the outset of the month, the focus was on August's historical stock performance, often characterized as lackluster, with September following as the weakest month. This year, these trends have distinctly influenced stock behavior. For NVIDIA, the pivotal event in the Q2 earnings release on August 23. The preceding quarter showcased NVIDIA's exceptional performance, triggering a notable chart surge. This has elevated expectations, though NVIDIA's track record suggests potential overachievement. Now let's see why NVIDIA Corporation shares are down despite recent ups and downs in the market. Is it a good idea to invest in NVIDIA Corporation right at this moment? The company's price-to-earnings ratio is higher than usual, standing at 215.29 times, and its 36-month beta value is 1.76. People have different opinions about this stock. 36 analysts say buy, 7 say overweight, 6 say hold, and 0 say sell. What about the numbers? Well, analysts think that the stock's average price should be around $515.38, which is above the current price. The company's shares available to the public are around 2.37 billion. And right now, those betting against the stock make up only 1.11% of that. Looking at trading volumes on August 11, 2023, around 49.33 million NVIDIA shares changed hands. Now let's dive into recent performance. The stock took a hit, going down by negative 7.29% last week, and it's been on a bit of a slide lately, with a negative 0.91% dip over the past month and the whopping 44.95% drop in the last quarter. Things have also been a bit rocky in terms of volatility, with a volatility ratio of 3.40% for the week and 3.38% over the past 30 days. Checking the shorter trends, the 20-day moving average shows a negative 8.60% decline, while the 200-day moving average is up at 53.65%. Moreover, recent reports from brokerage firms show that NVIDIA stock has a hold rating from Stifel. Stifel's research predicts NVIDIA's upcoming price at $440 as of August 9. Over the past 52 weeks, the stock faced a low point and hasn't fully recovered, currently reflecting a loss of negative 13.86%. Volatility was at 3.38%, rising by 3.40% in the last 30 days, with a drop of negative 8.54% in the 20-day moving average. Conversely, the stock traded positive 9.92% higher over the last 50 days. In the past 5 trading sessions, NVIDIA saw a negative 6.93% decline, affecting the 200-day moving average, which is 200.07% compared to the 20-day average at $451.28. Insider trading activity is noted, with the Miri John selling 283 shares at $424.53 on June 26 and now holding 2,401 shares valued at $120,142. Additionally, director Steven Marks sold 40,000 shares at $432.6 on June 20 and currently holds $1,052,286 shared values at $17,282,441. The past year saw a 183.44% turnover for NVIDIA Corporation, showing a potential trend of reduced gains. Now let's take a peek at how NVIDIA Corporation is doing financially. Right now, their profit game is strong. The operating margin is at 20.68 gain and cross margin is at 56.93 gain. Their net margin, which is like their profit slice, is sitting pretty at 16.19 gain. The company's returns are like high fives. Total capital return is at 15.40. Invested capital returns are 12.30, equity return is 20.90, and assets return is 11.30. NVIDIA's money mix is interesting too. They've got 54.44 points in debt to equity, 35.25 in total debt to capital, and 29.21 in total debt to assets. Long-term debt to equity hangs around at 47.98 and long-term debt to capital sits at 31.07. When it comes to their enterprise moves, the sale ratio dances at 40.57 and their debt to enterprise value is like a whisper at 0.02. They're quick with their receivables with a turnover of 6.36 and their assets are turning over at a pace of 0.63. And for investors looking at the liquidity dance, the ratio stands tall at 3.52. So, to break it down, NVIDIA Corporation has had a mix of good and not so good times lately. Some smart people who watch these things called analysts are a bit split on whether to say buy or just hold on the stock. Just know the stock's current price is quite far from its average price over 50 days and from its highest price in the last year. Here's a pretty cool thing. If you own NVIDIA stock, you made a nice 151% profit in just 1 year. Yup, that includes the extra money they might have given you. That's the dividend. Even better, this beats the average yearly gain of 48% they've had over the last 5 years. So it seems like they've kicked things up a notch lately. Maybe, just maybe, this means they're on a good roll in their actual business, and that's got folks thinking it might be a good time to dig a bit deeper. Now, while the ups and downs of the market can mess with stock prices, there are other big things to think about too. But remember, options trading and setting price targets are all about guessing and can be swayed by many things like how the market's doing, what investors feel, and news about companies. So, do your homework, look into stuff deeply before you decide to put in your money. So, what are your thoughts on NVIDIA stock and its recent performance? Would you be willing to invest in it? Let us know in the comment section down below. That's it for this video. Don't forget to express your gratitude by clicking on the thumbs up button, following Capitalista, and enabling notifications to stay updated and won't miss any of our future posts. See you next time and stay safe.